see the overall trend for market would remain positive as long as Nifty manages to sustain the gap that has been created today. So I would look at today's close and tomorrow's close as very, very important because after an event, what happened in 2014 as well, we saw a huge gap up opening after the election outcome, but the market started filling in the gap. And today, that's why it's become very, very crucial. I think buying on dips is going to be a very, very good strategy in today's trade. And first stock pick is going to be Bata India. And from the mid-cap space, this stock has outperformed a lot in the previous years, and I think this outperformance might start again from here on. So one can create long position in Bata India and keep a stop loss of 505 for the target of 553 over short term. The next buy is going to be Diwan Housing Finance Limited, and we can see that the entire microfinance space has been an outperformer over the rally which started in February last year. So this space has been a strong contributor towards the up move in mid cap and small cap space, and DHFL has continued to outperform. So long positions can be created in this stock, keeping a stop loss of 328 for the target of 363. And the final call is from the defensive space is Colgate. One can create long position in this stock because it has come out of consolidation after quite some time, and we can now expect it to move towards the level of 990, 992, which is the target. Maintain a stop loss of 940 on downside.
Okay, let's take in some viewer queries as well. And Prashant Cheda has written in from Mumbai itself. He sent us an email, or actually he's on the phone line with us. Prashant, hi, good afternoon. What's your question on LNT?
Yeah, hi, good afternoon to everybody. My question is on L&D Finance. Okay. I have 200 L&D Finance shares at the rate of 100, and my time horizon is 2 years to 3 years. What should I do now?
Pritesh, how would you help him out? What should he do with his holding in L&T Finance?
See, Man Infra has been consolidating for quite some time over past 2 years. It has been moving in a range. He has actually bought the stock near the upper end of the range, and prices are now moving towards the lower end, which is having a very strong support around 32 levels. So I would say he can hold on to the stock for now. Any pullback that he gets towards its cost price, I think that should be an ideal way to exit from it and put money somewhere else in an uptrending stocks, which is something like VIP, is a classical uptrending stock. So put money out of Man Infra into an uptrending stock.
Ashish, both of you, thank you so much for taking time out.